Welcome to this video on understanding the balance sheet. This financial statement offers a vital snapshot of a company's financial health and position at a specific point in time. The balance sheet is governed by the fundamental accounting equation: assets equals liabilities plus owner's equity. This means everything a company owns is financed, either by debt, which are liabilities, or by the owner's investment, which is equity. This visual illustrates how various items like inventory, cash, and equipment make up assets, while tax dues, loans, and unpaid bills constitute liabilities and owner's equity. What is a balance sheet? It's a financial statement reporting a company's assets, liabilities, and equity on a specific day. This snapshot concept makes it distinct from the income statement. It is primarily used by investors and creditors to evaluate capital structure and liquidity. The balance sheet is also called a financial condition statement or net worth statement. It shows what is owned, what is owed, and the resulting net worth. Comparing past and present balance sheets helps determine growth or decline. Assets are listed at their full value, even if not fully paid for. The balance sheet has multiple uses. External parties, like lenders, use it for evaluation and funding decisions. Internally, management uses it for strategy and understanding net worth. It's also critical for trend analysis and comparing current versus non-current assets. Assets are what we own and are categorized by liquidity. Current assets are expected to be converted to cash within 1 year, like cash and accounts receivable. Non-current assets have a lifespan of more than 1 year, such as property, plant, and equipment. Asset valuation is crucial. The two common methods are current market value and cost basis. Market value reflects the estimated selling price, including changes from inflation or deflation. Cost basis is the original cost less depreciation, indicating earned owner equity. Liabilities are what we owe, categorized by their due date. Current liabilities are due within 1 year, including accounts payable and short-term debt. Long-term liabilities, such as long-term loans and bonds payable, are due in more than 1 year. Shareholders' equity represents the net worth or book value of the company. Key components include common stock, which is the value of shares issued, and retained earnings, which are profits reinvested into the business. Analyzing liquidity helps us determine if a company can pay its bills. Key ratios include the current ratio, which compares current assets to current liabilities, and the quick ratio, which excludes inventory for a more stringent test. Analyzing leverage measures how much a company owes. The debt-to-equity ratio assesses financial risk by comparing total liabilities to total equity. The equity ratio shows the percentage of the company owned by its shareholders. In terms of structure, balance sheets commonly feature several line items. Under current assets, cash and cash equivalents are the most liquid. Account receivables represent sales revenue still on credit. Inventory, another current asset, includes raw materials, work in progress, and finished goods. Non-current assets include intangible assets, which can be identifiable, like patents, or unidentifiable, like brand and goodwill. For current liabilities, accounts payable is the amount owed to suppliers. Current debt or notes payable are non-AP obligations due within 1 year. The current portion of long-term debt is the specific part of a long-term loan due this year. Non-current liabilities include bonds payable and long-term debt, excluding the current portion. Shareholders' equity features share capital, the value invested by owners, and retained earnings, which is the net income kept by the company. The balance sheet is vital for financial modeling. It's used to calculate key financial ratios, evaluate a company's overall health, and calculate cash flow by analyzing changes in its accounts. Thank you for watching. For more insights and resources, please subscribe to our YouTube channel, Aspire Banker.